Bloomberg Audio Studios. Podcast.
The Stock
radio,
Movers Report.
news.
Your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's get a sense of what's happening out there with stocks on the move today. We can do that with Denise Sakova. Denise, what are you looking at today in the stock market?
We have to talk about General Motors. Obviously, profits are expected to grow as much as $2 billion this year. Stock is on a tear, up nearly 7% today. Ticker, of course, is GM. So there is this interesting trend. A lot of those legacy automakers are benefiting from President Trump's effort to water down Biden-era fuel economy. And a lot of those big vehicles, like the SUVs, they have the GMC Sierra and Cadillac. Those are the vehicles that are driving a lot of the profits, and we see adjusted earnings before interest and taxes this year will range from 13 billion to 15 billion, which is significantly higher than what we saw last year. A lot of optimism. The company was already up 50% last year, so a pretty strong start of 2026 as well.
All right, let's stay with the transportation theme. What else are you looking at?
Moving to airlines, things don't look so good for JetBlue. The company reported a wider loss than expected. There are a lot of challenges in the strategy to win over high-paying customers. That's been their new push. What we saw is the carrier posted an adjusted loss of 49 cents a share, 3 cents worse than what the street was expected. JetBlue has posted operating losses for several years. The airline has been turning to those high-end consumers and trying to woo most of them. For example, they opened their first airport lounge, but so far we're yet to see if that high-end consumer will bring enough revenue. The share fell as much as 9%. Now they're down 4%. Ticker is JBLU.
You guys fly JetBlue at all?
I do, because we go to the West Coast all the time to see family and to see my kids, and they have the most, options in terms of direct flights.
You like it?
Yeah, I mean, I don't have a problem with it, although I do think it's interesting that they're focusing so much on the premium customer when they spent so much time making clear that that was not who they were.
Right. Yeah, I also go to the West Coast. I feel they're very good for those short routes. And,
Have you gone to the lounge yet, the new lounge?
No, I don't have access to it yet.
All right, I'll make a phone call. I'll make a phone call. UPS, what do you got for us?
UPS, another gainer today. UPS is up nearly 2%. The ticker is UPS, of course. They forecast full-year sales above Wall Street's expectations. There have been a lot of cuts and efforts for the company to improve their profitability. The stock tumbled 21% last year as the S&P had a double-digit gain. What we're seeing is revenue will be about 90 billion in 2026, UPS said in a statement. Analysts had anticipated lower than that, so some of the optimism is coming from that. UPS has been trying to cut costs. It says it has saved 3.5 billion in 2025, so it's clearly working, but it's a long way ahead. They have closed and consolidated sorting facility, offering buyouts to union drivers, cutting back on seasonal workers. There have been a lot of those efforts, and so far this year, a small gain after a big loss last year, for sure.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.